Hello, welcome everybody. Thanks for joining us today. The Family Office Insights Luminary series. We're super happy to have our guest. You may have noticed that we did a Family Arthur's Roundtable podcast earlier, uh, actually at the end of last year, I think it was.
Yep.
And I have to thank my friend John for introducing us. And it's been a really interesting journey for me to get to know Rich and his company and also understand what it's like to invest in precious metals and gold, and in particular their strategy that they have that has an embedded guarantee. But we'll get into that a little bit more. But super thank you for everybody joining in today. If there's anybody that you think would be interested in hearing what you hear today, we're going to record this and post it on the Family Office Insights YouTube channel. And so you can review it or share it with others. And also, we're going to put you in direct touch with Rich and the firm so you can discover more if you're interested in participating. But today is more of a Luminary series, as you know, just getting to know Rich and his company. And then next week, we'll be sending out an invitation to go a little farther into the weeds with Rich as well. So we're looking forward to that. So, Rich, let's just start with a little bit of background because it's kind of interesting because it's all in the family type thing, right?
Yeah.
Uh, with your colleagues and your firm there.
Yeah. So a little bit about me. I guess I'm the typical precious metals dealer. I started out doing pre-med at the U.S. Military Academy at West Point. So, I think every precious metal dealer starts
Of
there, right?
course they did.
Yeah. So now I was pre-med track. I wanted to be a doctor, but I also wanted to serve. I thought, I went to school to be a leader. So um, rather than go out and become a doctor right away, I was going to choose to lead. I went infantry by choice, and I figured after a couple of years I could resign my commission, go to USU's University, Uniform Services, University of Health Sciences here in Bethesda, Maryland, become a doctor and serve in the military, have them pay for it. So that was the plan. I got out in the infantry and I liked it. So I decided to continue to do that for a while. I served about 6.5 years, Georgia, Hawaii, Korea on the DMZ, and then got out in '93. Was doing some direct sales, and then my uncle, who started this firm, reached out and said, "Hey, we're looking to expand. Would you be interested?" So he and his partner Glenn Kirsch, Michael Checkan and Glenn Kirsch, started Asset Strategies International. Back then, it was International Financial Consultants in 1982, and this was about '96 when he reached out to me, and I said, "You know what? I'm ready for a change. I'd like to give it a go." So they hired me as a client liaison. And I came to work. I was the fourth employee of the company back then. It was about a 14-year-old company at that point, and quickly loved what I was doing, learned every aspect of it, and grew up through the company. Now I'm president and COO, and we've got about 12 people or so. We've been as much as 18, but in this day and age, you don't need a lot of people to offer the service that we offer. Um, it's it's an interesting company because I don't look at myself as a precious metals dealer. I look at myself as an insurance salesman. We're offering wealth insurance. Everybody insures their health with their health insurance, their home insurance, auto insurance. What do you do for your wealth and your nest egg, your family's nest egg, if you will? How do you protect that? And I think the best proven way to do that over 5,000 years is gold. So I actually believe we deliver some value here over the past 42 years as a company, 28 for myself.
So is it fair to, in the family office world, we talk about behind closed doors just because it sounds a little smarmy. We say stay rich money. Like, there's you cordon off, like I'm going to make sure that I can take care of everything. And then if everything fails that might be risk on, then at least I know I can maintain my lifestyle, my family, my kids. Would you argue that this is one way to assure you have stay rich money?
I absolutely think that is the point of it
Yeah.
all. My goal in owning gold, and we've talked before, at times like now where there's potential for appreciation, you can make some profit and you may allocate some funds for profit potential. But 100% of the time, you have a small nest egg in gold for insurance, right? It's a store of purchasing power with high liquidity for a potential financial crisis you hope to never have. And for most people, that's somewhere around 10% of net worth is what they put into gold. That's the number. And I could tell you where we got that number if you guys care to hear. But it's a small number in the overall. And you buy it, and honestly, you hope that it doesn't do anything, that it just sits there and collects dust, because that means 90% of your portfolio is doing just fine, right? And it's continuing to churn on and grow wealth and provide for future generations. But what happens when that 90% falters? And there are times in history when it does. Gold is well known as a store of purchasing power and I guess, a haven in inflationary times when there's geopolitical crisis, et cetera. What most people don't understand is how well gold does in a deflationary period, right? And you don't have to go back that far. Just let's look back 2, 3 years. Was it 2022 when everything tanked, right? So bonds, the worst year in history, stocks were all down, every index was down, you name it. Everything went south, and gold was flat for the year. But that was about a 20 some odd percent outperformance of virtually everything else. Okay. So gold actually does really well in deflationary times as well. So, and I saw a question come up about the 10%. Does somebody want to know where that comes from? Because I'm happy to share that.
Yeah. So, by the way, if you see the questions and you feel like answering them, don't wait for me, but let's just repeat the question so everybody hears it.
Sure.
10% of net worth or 10% of investable assets. And so you offered to explain how you got to that number. Let's just do it.
Yeah. So for me, the wealth insurance, that definition I gave you, for me, that's 10% of net worth. That's a big number, considering most of the world has a 0.5 to 1% allocated to gold at all. All right. So that's a big number. I get it. And most people say I'm just not that liquid, right? But where it comes from is World Gold Council and other folks have done studies where they looked at different portfolios comprised of denominated in different currencies, comprised of different stock bond mixes percentage wise, and with different amounts of gold sprinkled in. They crunched all these numbers, and what they found was, regardless of the currency, regardless of the stock bond mix, if you had somewhere between 8 to 12% of gold in your portfolio, it tended to increase performance and decrease risk. Okay, so and 10% is halfway between 8 and 12, and the math's a whole lot easier.
Yeah, makes sense. Yeah.
That's where 10% comes from.
Yeah.
So the investable assets, I mentioned, sometimes in an environment like this where gold and silver are poised for higher prices, you might want to look for profit potential. Here's where I look at maybe an additional 10 to 15% of investable assets for profit. But I manage those two very differently. So for the wealth insurance, I buy it, I hold it, I never, ever, ever sell it unless I have a financial crisis. And
Yeah.
if I do, I sell it immediately, meet the need, and then right away, when I can, I start building that back up for the future crisis I hope I never have.
Yeah.
When it comes to the for-profit assets, whatever that allocation is, if it doubles in value, you sell half. You don't blink an eye. You do it
Yeah.
immediately. If it drops in value and the market is still telling you that gold should go higher, then you go ahead and you buy another
You fold in.
tranche to get it
Yeah.
up to the allocation.
Yeah.
And if you do that all through the bull market, you're always buying well and taking profits. And if that happens all along the way, who cares where the peak is? As long as you can recognize when you've made that turn from bull to bear. And I have some criteria I can give you to consider when that happens.
Yeah. So obviously you need some guidance on that sort of thing. And uh, for a for-profit play as a percent of investable assets is obviously a much lower number
Yeah,
than of net worth, right? So,
no
or
question.
arguably,
The biggest chunk
unless
of
you're
this.
totally liquid, right? But that's a whole other thing. Is it fair to ask this question? Um, People argue, you there's a continuum of gold no good, gold great, somewhere in between.
Yeah.
Is it fair to ask the question that has gold been able to stand the test of time hedging inflation? Has it really done that?
It actually has, so the easiest example for that is kind of, your audience may have already heard it before, but you talk about the business suit of the day, right? So gold's been around for like 5,000 years, and it's done its job for that long. It's the only thing that we know that has done that job for that long. And the story goes this way: back in Roman times, the business suit of the day was a toga, a pair of sandals. It cost an ounce of gold to buy the business suit of the day. In 1913, when the Fed was created, okay, gold was about 18 bucks an ounce back then. Okay, a brand new nice business suit was $18. Okay. Today, 27.50 an ounce, or 26.50 an ounce. Or no, I'm sorry, 27.50 an ounce. For $2,750, can you buy a nice new business suit today?
Yeah, sure.
Can you for $18?
Yeah, yeah,
No. Gold is protected purchasing power generation upon generation upon generation. Yes, it is absolutely well suited to do this. And depending when you look at it, I hear the argument all the time, gold is a dead asset, right? It doesn't kick off any interest. It doesn't kick off any dividends. So much better being in the stock market, right? If you look from 2000 till now, so the start of this millennium, almost 20, going into the 25th year now. I don't have the updated numbers for today. I'm happy to share them with people afterwards if they're interested, but you can do the math yourself. Look at the value of the stock markets in the U.S. So the Dow, the Nasdaq, the S&P, and compare that to gold and silver. I want to say right now those numbers are somewhere around 200 to 300% appreciation for the indices, for the equities markets, about 400% appreciation for silver, and somewhere around 700-800% appreciation for gold. Gold is doing its job, make no
yeah.
mistake about
So can I steel man this for a minute?
it.
So
Yep.
the people who are paying attention, and not to be difficult, but can you calculate the friction of owning gold to accommodate for its raw number that's tracked? In other words, can you assign some sort of friction number that is pretty reliable that says, okay, it costs X amount at scale, reasonable to buy to keep gold, right?
Yeah. Yeah, and that varies, obviously,
Right.
right? So I can tell you industry standard, really the only carry cost you have for gold is going to be your cost to store it. And the proxy could be just a well-established vaulting facility. On average, you're probably going to pay about 0.5% per annum. So that's your negative interest or your drag on
Yeah.
your value, right? But as we're going to talk about next week, I don't want to put the cart before the horse here, but there are options out there where you can store for free with a government guarantee.
Yeah.
So,
Yeah,
uh,
we
so,
we, we can talk about
so
that.
it could vary.
Yeah. So, but that's interesting because you have to think about things in all-in situations, and you also get perhaps uh, things that you can't measure, like you sleep better at night, right?
That
Right?
comes with gold too, but
Yeah.
also, and I understand the numbers that I gave you are just raw.
Yeah, of course.
Gold a little bit less if you got to factor in storage, but the indices will be a little bit more too if you factor in reinvested dividends and so forth. But
Or taxes, right?
even with
Yeah.
reinvested dividends, gold is outperforming.
Yeah.
I can tell you without blinking an eye. So.
Yeah. So no, let's go ahead and talk about Perth. Let's just share it with at least give them a taste of what you guys have discovered, which is super
Yeah.
cool.
So just real quick, because we're going to cover it in depth next week, but the Perth Mint program is unique in that to this day, it's been around 28 years now. To this day, it's the world's only government guaranteed precious metal storage program. It's the only one. Perth came to us 29 years ago now, and they said, "Hey, we have a couple problems we'd like you to solve," and I'm going to go into those in depth next week and how we solve them. But what we built for them as we designed this program and helped write the terms and conditions was a way for clients to buy gold, silver, and platinum, save on the cost of fabricating into bars and coins of various sizes. So they save that money up front. That would be a fabrication fee that's added to the gold price when you buy something physical to take delivery of. And they don't charge you at all for storage fees. And most people are going to say, well, if they're not charging for storage, it's because they don't have the metal. And that is absolutely untrue, okay, in this case, because we know better. The bottom line is they have the metal, they can do this, and it actually represents a cost savings over the previous way they did business and how most mints around the world continue to do business. And the factor in there that's really the painful part is the high leasing costs that bullion banks charge them to borrow metal to make up coins and bars ahead of time, waiting for the world to buy them. Okay. If we offer free storage, basically the Perth's giving up 0.5% of real costs. They have to warehouse the metal, they have to safeguard it, they insure it at their costs. But what they're only paying is about 0.5% per annum. That's the physical cost of that. Bullion banks charge much more than that in leasing rates to borrow the metal. So we actually saved a lot of money for the past 3 decades. It's a great program because it's one of those win-win-win situations, the kind we love as business people.
So we'll get more into that next week, as you say,
Yeah.
but can we just chat a little bit about why Perth and why this hasn't been done in Switzerland in the side of the mountain? And, people, uh, you know, think about gold and they think about a vault in a mountain in Switzerland, right?
Yeah, of course.
So what is it that caused them to be the innovator in this, besides you helping them, right?
Well, they're an odd organization in that they're a pseudo government slash business. It's hard, not very many governments exhibit strong business
No
fundamentals. We
shit.
talked about this, and
Yeah,
I'm trying to be nice how I say this.
yeah.
Yeah, but we talked about this when we got together a little ahead of time. But they're not good business people. Earth is different. They're actually a proprietary business and a government. So the government brings it also brings that business acumen where they're one of the world's top refiners of precious metals. And they process a lot of gold, especially in the Asian rim, but all over the world. So they're renowned. And I'll just give you a little side thing about their capabilities. A lot of people don't realize this, but by law, anytime you want to make a coin here in the US, a gold eagle, for instance, that gold must be mined in the US, right? That's by statute. So it's got to come from us, not from somewhere else. And the US Mint, we've worked with them for many years. We work with all the major mints, but the US Mint, they're not really good at making those blanks. There's a lot of errors, a lot of rejects, and it's a really cost prohibitive process. It's actually cheaper for the U.S. Mint to get gold mined here in the U.S., ship it to Australia to the Perth Mint, have them go ahead and make the blanks with high success rate and low failure rates, ship it back to the U.S. where they can then stamp it.
Wow.
And that's cheaper than us doing it ourselves. They're really good at what they do, is my point of that little vignette. So that's part of it. Part of it was they just called us and said, listen, we would like to find a way to do this differently and save some money. And they knew that Michael and Glenn had been doing this for a long time. They got into the business probably in the 60s and 70s. So they had a lot of experience. They knew all the players, and we were able to come up with a solution for them that worked.
So let's talk about actually there's a question here that I'm just going to read.
Numismatics. Yeah.
Yeah, but I was going to ask the question about confiscation
Yeah.
because, this is America and we want our guns and we want our gold and let's not screw around, right?
Yep.
And
You
nonetheless,
buy
it
it with both
happened.
hands, right?
Yeah. So just give us your thoughts on the 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 chance of that whole confiscation thing happening.
Yeah, I think that's kind of a self-serving argument. I noticed they put experts in air bunnies and quotes
Yeah.
right there,
Yeah.
and I would absolutely do that because I have a different word for them. The bottom line is a lot of rare coin dealers, if that's all they do, right? They're trying to get people to buy their products. When you buy their products, you get much, much higher premiums. Okay, so the dealer makes a lot more money on every one of those rare coins or numismatic coins that they sell than they do on a bullion coin, which you're only getting paid, what, 0.75%, somewhere to 1.5, maybe two, depending on the size of the trade. Tiny margins in the bullion business, but in the numismatic business, God, they probably start at 25%, go up to 100, 200% premiums. So they could fund a lot of Stanford educations out of that
Yeah.
premium if they can get you to buy it. So they need that hitch, that's something to get you
Little
sucked in.
fear, little
Yeah,
fear.
and they
Yeah.
sell fear, which gold is good enough. You don't need to scare people into buying it. Rational people should buy gold, right?
Right.
So what they do is they say, listen, they confiscated gold back in 1933, Roosevelt's edict, and it was illegal to own gold until 1975 in the U.S. Most people don't even realize
I
that.
know, isn't that wild?
Yeah, it's crazy. But the bottom line is they don't understand why they confiscated gold. They never wanted your gold. What they wanted is they wanted to revalue the dollar.
Yeah.
So what they did is they collected up as much gold as they possibly could. Didn't get it all, that's fine, but they collected enough of it where then they went ahead and revalued gold's price in dollars because they were freely convertible, right? If you took it way back when, if you took in a $20 gold piece, you got a $20 certificate, took it a $20 certificate, you get a $20 gold piece. They were convertible. So what they did back in 33 is they confiscated the gold and then they raised the gold price into like 30 some odd dollars and they did a devaluation of the US dollar. Why can't we do that now? Why is that not an option for us today?
The Fed, right?
Well, Richard Milhouse Nixon back in
Oh,
August 15th,
because the
1971,
gold standard doesn't exist
broke
anymore. Yeah.
he broke the tie between gold and the dollar.
Yeah.
So now collecting all the gold has no impact whatsoever. You can't all of a sudden revalue gold. It freely trades against the dollar and
Yeah.
against every other major currency. So there's no incentive for them to confiscate your metal other than loss of faith or confidence in the dollar.
And the dollar.
And the bottom line is you start taking people's gold in this day and age. I mean, we saw what happened when people thought the election was stolen from them in January 6th, 4 years ago. You try to take somebody's gold away from them, I don't think they're going to turn it in willingly.
Yeah, just
Like that
like I,
feeling.
like I said, just like trying to take people's guns in this country. Other countries don't understand our gun thing, but it's part of our culture, right? Not to mention we have some
I
rules.
forget who made the comment. I think it was probably Jefferson or somebody like that. But and I'm going to probably screw it all up. But the bottom line is the best situation is when the government fears its people, not the other way around.
That's
Right?
right. And what's the other thing I love is we have the First Amendment, which is freedom of speech, and we have the Second Amendment to make sure we can keep the first, right? Right.
Yeah. So
So
yeah, I think if you try to take gold, it's like taking guns. It's like forcing religion on somebody. It's we're not going to take it sitting down. And as a nation, one of the things that makes us different is we question authority.
yeah,
So
of course. Can we talk a little bit about your view of the opinion of some that suggests that Bitcoin is a store of value, similar to what we understand gold to be, even though there's all kinds of caveats around that. What's your viewpoint on all that?
I think it's a great speculation. And someday it may be a store of value. I think we're working that direction, but it was launched in 2009, right? So we have what a 15-year-old,
Yeah,
angst-filled teenager trying to figure out what it wants to be when it grows up. And I don't think we figured it out yet. I
yeah,
don't think I don't think the major proponents and believers in Bitcoin still know where it's going or what it will be. And a lot of the purists are unhappy because it's not what they think Satoshi envisioned when he launched it, right? Whoever the heck Satoshi is, some people think it might even be the CIA. But that's all speculation and whatever. I don't know. What I do know is the way it behaves. And when you see huge run-ups on news or emotion, and you see huge fallbacks on news and emotion, uh, typically that's something that people are speculating with, right? They're loose hands, weak hands. They get in and out as the wind changes. That's not what I want from a store of value. I want something that holds purchasing power. Now, gold does fluctuate as well, but not to that extent.
Oh no,
You're
the
not.
volatility in Bitcoin is, inherent in its youthfulness, let's just say, right?
No,
And
yeah.
it's really interesting. I know so many Bitcoin maximalists, and it's really fun to talk to them. But the thing that uh, I was going to ask is there any correlation between gold and Bitcoin
I think
involved?
there's similarities,
Yeah,
right? So here's where they're similar. And some people in my industry will fight me on this, but I think they're wrong. I think they're both what we call hard assets. Okay. And I don't mean you can bounce it on a table, right? What I mean is there's less and less of it available over time. Therefore, the price pressure over time should be up. And if you measure them in fiat currencies, their value should go higher and higher because fiat currencies are mismanaged. We all know that. So these can't be managed. Another similarity. I can't dictate what the price of gold is without other factors taking over and ruling me out. Same thing with Bitcoin. So there's less and less of over time. There's a fixed number that will be available, is what they say. You can fight that with, well, there's other cryptocurrencies, but they're not Bitcoin. They do other things. Can I see the question about AI, quantum computing. Is it going to be safe in the future? We don't know. I mean,
yeah,
those are unknowns for a 15-year-old brand new technology. The other similarity, though, is it's kind of a reaction and it's been embraced by people who think like gold people think, right? People go to gold when they don't trust the dollar. When they think that our authorities are mismanaging the fiat currency, they don't like how they're being stewards of the value of that currency over time. They say, there's got to be a better way. They go to something that cannot be mismanaged because it cannot be managed, right?
right,
So they go to gold. Same thing with Bitcoin. Decentralized, you and I can't control it. We can own a piece of it. We can have a say in what the price might be because we bought some or sold some, but we have no control
yeah,
over where that price ultimately goes, how many Bitcoins are created. I can't just say, okay, I've got to pay more bills. Let me launch more Bitcoin.
right, yeah.
Can't do it with a dollar. Can't do it with gold either. So there are some similarities. I think eventually it will figure itself out. I'm riding the speculation. I bought some in 2015. I'm very happy with what's going on with Bitcoin. I hope it goes to the moon. But to me, it's absolutely speculation. So for me, that's 1 to 2% money that you can lose, never blink
Yeah,
an eye.
never change your
I
life.
know.
Yeah, yeah,
Yeah.
yeah. It's interesting that this this you can't change. Although I've read the white paper, most of it was over my head. The fact of the
Sure.
matter is there can be more Bitcoin issued, but it will highly unlikely that it would be because everybody would have to agree to let it happen, and that is just not practical. Uh,
Especially people already holding it. They're not going to
yeah.
want to do it.
So
So
can you talk about the supply of gold in terms of, for example, De Beers, creates their own diamond. They've created the scarcity, right? And it's probably not a very good example, but can you talk about that in terms of gold supply?
yeah, so when I debate gold versus Bitcoin, and by the way, every debate ends with why not both,
Yeah,
right?
why not both?
Why not both? Why does it have to be this
Exactly.
zero sum gain type thing?
Yeah.
But whenever I debate that, one of the big things I hear is that this gold meteor that's about to hit the earth, and then what happens to the value of the gold price? I'm like, well, if we get hit by a gold meteor, okay, nobody's going to be around to calculate the
Yeah.
price.
Yeah. Yeah.
So done,
Yeah.
mission
Yeah.
over. So the bottom line is, barring, basically you look at what's in the Earth's crust. And what we know is there's still a lot of gold in the Earth's crust, but we've gotten most of the easy to get, low hanging fruit, if you will. Nowadays, it requires more technology, more money, more time to go deeper, to go into more severe climates, places, et cetera, in order to find this metal. So that's what we call a hard asset, right? Kind of Bitcoin, there's less and less over time. Same thing with gold. There's less and less that you can get out of that ground over time. There's still plenty for our needs. I mean, it is used industrially, but to a small scale. The vast value of gold is really jewelry, and it kind of goes hand in hand as money, right? People don't realize it, but probably the way jewelry came about was, we talk about the tale of the tales. And I don't know if you're familiar with this story, but
No, go ahead.
Glenn and Michael started in this business, early on in the 60s and 70s. They worked for a company called Deke Pereira. And Deke had I guess they were the only precious metals firm that was allowed to go into the five refugee camps for the Vietnamese refugees coming over from when South Vietnam fell, right, in 75. So they went down to Eglin Air Force Base, and they were meeting all these refugees coming in. And we talk about the tale of the tales. So the TALE, the story of the TAELSs, which are thin sheets of gold, is how gold trades in Asia, in many places. So there were people that came over with tails, gold tails. They were able to leave their country, which the government was toppled, and use the gold to start a new life, albeit in a foreign country.
Yeah.
And they gave them fair value, and they were able to start over. Other folks came over with suitcases full of Vietnamese piasters, right? So this is the paper currency of South Vietnam. My question is, how much was the South Vietnamese piaster, paper currency, worth when Saigon fell? You remember the pictures of the helicopters taking people off the tops of
Totally.
buildings. How much was that piaster worth when the government fell?
Like almost nothing, right? Yeah.
Absolutely nothing, because the
Yeah.
government that issued it and stood behind it was no
Yeah.
longer zero. It's a worthless piece of paper. People had worked their whole lives, came over with suitcases full of Vietnamese piasters, and they basically were starting over with nothing
Nothing.
in
Yeah.
a strange land.
That's a
So
good story. Yeah.
it's true.
Yeah. Yeah.
So I've run into so many people that, Vietnamese refugees that have started their life over. This one client of ours, she's a medical doctor. She's like, I owe my life to gold,
Yeah.
because they had to buy their way onto these boats to get out of there and then start a new life. We can't imagine it here in the US because, we're surrounded by, weak, friendly neighbors, north and south, big oceans left and right. And we're like, dollars, world's reserve currency for how long, we don't know. And, we just feel immune or isolated or insulated. But it could happen here too. I think we're starting to see, a little bit of chips in the armor, if you will.
Yeah, can we talk about this? Because I've always been puzzled by this. And for example, the Bitcoin maximalists talk to me about the value of Bitcoin,
Yep.
and I own it, by the way.
Good.
Uh, and the thing that uh, I'm not an economist, I'm not a sophisticated currency person, but when you measure Bitcoin again, and the only way to measure it is against a dollar, which is a fiat currency, what's that tell you? Like you're measuring it against something that you don't believe could possibly, survive,
So
but
this is a
that's the
great
only thing we have to measure. I mean, it's really interesting, right?
this is a great point. My gut feeling is everything value or worth should be measured in gold, not in dollars, not in Bitcoin. Anything that fluctuates isn't a good measuring stick. So I give you an example. Let's say I have a 12-inch ruler, right? And I measure my desk, and it takes six of them. I've got a 6-foot long desk. Overnight, I cut an inch off the end of that ruler, and I measure my desk again. Now my desk is 6.5 feet long, right?
Yeah.
Did my desk grow?
No.
No, my ruler sucks, right?
Yeah.
So what you need a strong measuring device for whatever you're measuring, time, weight, length, whatever. In the case of value and worth, I think you need a constant store of purchasing power. You need gold to measure it. If you want to get a true value of where everything is, measure it in gold. It's kind of an eye opener.
Isn't there a website like that? Everything in gold?
I think there is
Yeah,
actually.
yeah,
And I
yeah,
suggest people go to it. I mean, think about what a gallon of milk costs. Think about a college education, not in dollars, but in gold. You know, think of the Dow. So people look at the Dow right now and they say, what do we make, 40 some odd new all-time highs last year?
yeah,
Um, if you measure it in gold, what you'll find out is we're not even 60% of the way to where the Dow was before the dot-com bubble burst. So we're making nominal new highs, but real new highs, we're nowhere near that point yet. If you
which would
measure it,
suggest that the Dow might be undervalued.
I think the Dow's overvalued.
Oh, I see.
Yeah, yeah.
Yeah, I see.
In dollars, it looks great,
Yeah,
but in real worth, gold, ounces of gold, it's not performing
yeah.
like it was even in '99.
Yeah, and it's kind of inexplicable why the Dow keeps on going up, but that's another issue altogether, right?
Well,
I'm sorry, you froze up on my end. What was the last thing?
yeah, I was just saying, more buyers than sellers is what my uncle's partner Glenn would always say.
Yeah,
Why is the market going up? More buyers than
more
sellers.
buyers. Yeah, it's an auction market, right?
Mhm.
That's what it is.
Absolutely.
Yeah. So let's talk about, I make comments all the time that I get chastised for, so I'm going to make one. Profiling works because profiling works. And I'm not, Asians are bad drivers. It's not my fault, it's their fault. So the
You're gonna get us all into trouble here, Arthur.
yeah, right, I know. So, your business is one that's been painted with a brush of, buyer beware. Can we talk about the the red flags one should look at?
Yeah, there's no question. And it's sad. I told you when we started, you asked about how I got into the business and so
Yeah.
forth. And I absolutely believe in what I do. I believe we help people, and it bothers me when you see some of the things going on. I mean, just in the news lately, there's scams everywhere of all shapes and
Oh, yeah,
sizes.
everybody has their scams. Yeah. Yeah.
I mean, there's something going on with like, uh, texts about unpaid tolls and stuff going on right now. So there's always something. The bad guys are looking for a way to make money without working for it. But the bottom line is, just recently there was a scam. Uh, People were contacted by someone who claimed to be the FBI, saying your bank account was compromised. In order to fix it, you need to send us a kilo of gold. Now, put this in perspective. That's 32 ounces of gold. That's trading about $80,000 a bar right now. I don't know what's going on in my bank account, but it's not going to take $80,000 to fix it. And the FBI is never going to ask me for that, right?
Never.
Uh, so, some of it is just common sense.
That
Just
that that
it,
per
it
the
smells
person
funny.
that it the person that would actually is inexperienced, naive, or just stupid. So, you know, uh that is
They
like,
just don't know. They don't
yeah,
know any better. And
yeah,
I'm not going to judge.
yeah,
But so that's an outward, just criminal activity.
yeah,
For me, what's even worse, it's insidious, is when there's a dealer in the industry who tries to pull the wool over your eyes. And that can come in a variety of ways. The first one, I'll just give a tip to everybody. If you're considering buying gold from me or anyone, the number one question you should ask is, when I'm ready to sell this, will you buy it back from me? And you'd be surprised how many precious metals dealers will say no.
they actually say no, not maybe,
They know
depending on
we
what it
don't we,
is.
we don't buy back, we only sell.
Yeah,
And I got to tell you, Arthur, I've been doing this a long time. Um, that's the best business you can do as a dealer, right? Because if I don't have to involve a wholesale middleman, right, and I can work by buying from one client and selling to another, I can pay the client I'm buying from more than I normally could, and I can sell to the client that's buying less price than I
yeah,
normally could. And
and still make plenty of money,
I
right?
can make more money in the middle.
Yeah,
This is a great situation Why would you not do this
Yeah.
business? And they'll say stuff like, well, you can do better at auction if you sold it than if you sell it to me or what have you.
Yeah.
So that's probably your best option. That's all garbage. They're just tap dancing and coming up with something to confuse you. And really the answer is they charged you so much going in. And if they bought it back, they'd give you price discovery. You'd know how badly they took
Good point.
advantage of you when you
Yeah.
bought it from them. So
Yeah.
if anybody says, no, I won't buy this back, you should never, ever buy anything from them.
Yeah.
Not once, not twice, not ever. Okay,
Yeah.
so that's my first piece of advice. The second one is, and your listeners have an advantage because now they're being introduced to me and my firm. If they have any questions, if they're not sure, they just want to bounce something off of us if they've been offered, ask us. That's what we're here for. You don't have to call me up just because you want to buy something. If I can guide you around the sharks in the water, I'm happy to do that, and I don't take a fee for that, right? So just bounce it off of us. But there's people out there that will sell what we call it modern issue collectibles, right? So these are it could be, uh, let's say, bullion coins that are put in holders that are certified first strike MS 70 coins, right? So that's the best grade, etc. The reality, Arthur, is every coin that comes off the off the press is 69 to 70 grade. And all they did is
They put a good
right?
housekeeping seal on it or
And they
something.
charge you a whole lot more money and you say, oh, I got something really wonderful. But when you sell that back, all the dealer's going to do is pay you gold price for it.
Yeah.
So you're paying a premium on a narrative that never comes true. Don't buy modern issue collectibles. If you're going to buy a collectible, buy one that's proven to be desired. 333 US gold, early US silver, etc. Things that there's absolutely world and ancient coins even, but there's a proven market. They're not making any more of it. It's known to be of value and desired, right? And that brings me to my next point, which is a lot of folks will tell you, listen, there's only a handful of these made. They only made 2,000 of them. And they'll tell you some sort of story or narrative about in the next couple of years, this is going to happen and these are going to be worth so much money. I've never seen the narrative play out yet.
Mm.
Okay. And just because something is rare doesn't mean it's desirable. Right.
Yeah.
So there may only be 2,000 things of something, but if you don't want it, who cares?
Yeah.
Something's only worth what people will pay for it, right? Not
Exactly.
not just because it's rare. There could be one pile of
Yeah.
cow, in the world that doesn't mean people are going to want it,
Want it.
right?
Yeah.
So the bottom line is don't fall for that either, that limited liability, because what happens is folks will look at it and they'll try to shop it. They'll go to other dealers and say, well, how much would you sell me this for? And nobody else is selling it because this company only made 2,000 of them, right? If
So
you
there's
can't,
no comp, right?
no comp. If you can't shop it, don't buy it.
Yeah. Very, very interesting.
Yeah. You pay attention to those three, you'll stay away from most
Most of the
the
stuff.
sharks. If you
Yeah.
have any questions at all, bounce it off of us. If it's a great deal, I'll tell you it's a great deal. Buy it.
Yeah.
Even
Is
if
it fair to say, and I don't want you to be disparaging about your competitors or put you in a position to do that, but we've seen nonstop commercials on TV from celebrities, and we've talked about this, but if we
we
could
don't know
share
anything about gold, by the way,
yeah, right.
at all.
So what aside from the obvious thing that advertising on TV and CNBC in prime time costs a shitload of money, and that has to be paid by somebody, right? There's nothing wrong with marketing dollars. I get
You're
that.
answering the question for me right here.
Yeah. So talk to
Yeah,
us a little bit.
yeah. So the celebrity endorsers get paid. They're not doing it just because they're humanitarians and they think everybody ought to own gold. They're getting paid by that metal dealer to get people to buy gold, right? Who pays for that? You, the customer. Nobody else.
Yeah.
Nobody else. Um, if they're advertising on TV or they're selling it on TV late night, TV airtime costs money. If they're on the radio airtime costs money. Who's paying that bill? You. There's
Yeah.
nobody else. There's nobody else in the equation that's going to pay more to get that metal in your hand than whoever's offering it to you, and they're going to cover that with whatever they charge you for what you buy. So you're going to pay too much for everything you buy from them.
Yeah.
My general rule is if they advertise on TV, if they advertise on the radio, if they advertise with a celebrity, find another firm. If you like their message, that's great, but go buy it from somebody where it's going to be much more affordable.
Yeah, makes sense. You know, it's interesting to see the longevity of these commercials before and during and after the presidential election because it's nonstop. It's so and you can rationalize, well, if they're continue to do it, it must be working. That's probably true, but that doesn't help you as the buyer, right?
It doesn't help me in the industry because,
Right.
I know people are getting taken advantage of, and then they get a bad taste in their mouth. Um, somebody did a survey, I forget who it was, and they said, do you think you should have gold in your portfolio? And it was like staggering, and I already told you it's like half to 1% that actually hold metal. Staggering the number of people, like 70 some odd percent, 75% said, yes, gold ought to be in your portfolio. Why don't you have it in your portfolio? Two reasons. They don't know how, or they don't trust precious metals dealers. And those two are horrible condemnations of our industry. There's no
Yeah.
question about it.
Yeah.
I'll give you an example. A celebrity endorser and not being able to shop versus being able to shop. So we have a client now who had bought from one of these celebrity endorsers, and everybody knows this guy's name, I promise you. Okay. And he said, buy gold from these guys, they're great. He didn't do any research. He doesn't know anything about them, how their business practices are. He got paid. So he said, buy from them. They're great. So he went to him and he said, listen, I've never bought gold before. He was honest. I've got $300,000 I want to put into precious metals. Tell me what to do. He said to come see you. They said, great, great. So for the first $11,000, they went ahead and sold him 1 ounce gold maple leaf coins from Canada. Two most popular coins in the world are Eagles #1 and Maple Leafs #2. So if he had shopped those coins, and he did, he would find out that they were selling them to him below the gold price. Unheard of. Unheard of. Nobody could beat that price for about $11,000 worth of the 300,000. The other 289,000, they put him into obscure Canadian animal coins, lynxes, foxes, whatever.
High margin stuff.
Well, not even that high margin. They took advantage of him here, but nobody else had it, so he couldn't shop it. So the stuff he could shop, they gave away. The stuff he couldn't shop, they charged him on average 55 to 60% premiums on all of it. Now remember, bullion is 0.75% to 0.5%. They charge him 55 to 60%. When he came to us, because he had been trying to sell it back, he said, I bought too much. I want to sell a little back. He said, no, you don't want to sell it. You don't want to sell it. You don't want to sell it. And he just listened to him. He was a victim and he didn't know any better. We wrote an article for a financial newsletter. He read it. He said, well, let me try these guys. So we got him on a Zoom call and we told him that what he told us he had was worth about $145,000.
Bummer.
Spent $300,000, and in the meantime, gold and silver had gone up, and yet it was worth less than half. And it's because of what they did to him, and it's absolutely calculated and insidious.
Yeah.
And basically, I said to him, "Listen, I can't buy it for what you paid for it because it's not worth that."
Yeah.
The best thing you can do is you can go back to them and say, "Listen, I know what you did to me, and if you don't fix it, I'm going to bring the authorities in." And go back to the celebrity endorser and say, this is what the firm you recommended did to me. He did both of those things. Celebrity endorser didn't do what they should have done up front. They didn't do their homework and they endorsed a garbage firm. But to his credit, he reached in and said, make this right. So they reached out to him and said, listen, if you sign an NDA, so you don't tell anybody about it. I didn't sign it, by the way, so I can say whatever the heck I want to say because I saw his prices. I saw his invoice. I know exactly what he paid and when he paid it. But if you sign an NDA and send us all the metal back, we'll send you $300,000 back. He was lucky. Most people don't get that resolution because they're too ashamed and they feel like
Yeah,
victims.
they would just fold their tent and keep on moving and live with it and
Uh,
yeah.
that's the price of an education, but it shouldn't be.
Yeah. Well,
So
that's egregious, right? I mean,
this is the stuff that keeps me up at nights.
yeah.
I wish there was a way to get rid of it. So
Because that way, like you said, it wasn't just a little bit
no,
uh
this was calculated.
they it's like the bait and switch. They lured him in with the low price on something he could do a comp on, and then the other stuff. I mean, that's just bad people.
And that happens in every industry. I get it.
Of
There's
course. Yeah,
everybody
yeah,
does that. But
yeah,
you know, in the metals industry, the margins are tiny,
yeah.
right? So do your homework. If before you do anything, reach out and ask us. If it's a great deal, I've done this. You can ask our clients, go. I
Yeah.
can't beat that price. Some other dealer may have bought something cheaper, market went up. I can't source it at that price. Do it. It's a great value. I'll
Yeah,
tell people that.
yeah.
I want them to be happy. In the end, as long as they own gold, I know I'm going to have enough customers to keep the doors open. So
Yeah, that I'm sure that's the case.
I'm not worried about that.
Yeah, let's say that's super helpful. Let's see if we can get this question. Silver versus gold. There are numerous industrial uses for silver, and it appears that supply will be dwarfed by demand for years to come. Isn't the upside for silver far greater than gold?
Absolutely. No question. Yes, you are 100% on top of things, Rob. So the bottom line is talk about the deficits to start with. So for like 11 straight years, silver was produced as at a surplus. And we had extra silver above ground, even with all the industrial uses, and it's used for a myriad number of things. But even with all those uses, we had surplus silver that stacked up over 11 years. 2 years of deficit production at the end of those 11 wiped it all out.
Hmm.
Wiped 11 years worth of surplus wiped out in 2 years of deficit production. And past year was another deficit. They're anticipating another deficit now. Um, Gold is benefiting from a monetary metal standpoint on gold's coattails. Silver's benefiting on gold's coattails, right? So it's moving up in price as a monetary metal. But there are so many other industrial applications that are going to benefit silver. All the green technology now that may hit a little bump in the road here with the change in policies with the new administration, but you can't tell me they're just going to stop making EVs now.
No.
That we're already walking down that path. That's going to
Hmm.
happen.
Yeah.
Solar panels consume silver, et cetera. This stuff is not going away. All right. So silver demand is going to increase and they can't keep up with it right now. The other neat thing about silver, it's inelastic, which means I can't just make more because I need more, right? Because silver is typically a byproduct of mining something else. So you actually need to have more of the something else before you can get more silver out of the ground, right? So it doesn't really respond to the demands, the demand side of things on the supply side, unless we need whatever else is being mined with silver. So that's just something to keep in mind. The other neat thing about silver, and when I talk insurance, for me, it's gold. It's maybe a little bit of silver for divisibility, but it's gold. When I look at profit potential, I'm looking at silver. So last, well, last two bull markets were the only bull markets we can measure because we had official prices for gold and silver prior to 71 when Nixon took us off the standard. But since 71, we've had two bull markets. This is our third. The first one, gold went from $40 an ounce to 850 from 71 to January 1980.
Wow.
Silver outpaced gold over, I want to say, 1,000% premium. It went up to $50 an ounce from like 250 or something like that, whatever that is, maybe 2,000%. I don't know. Next bull market, 2001 to 2011, gold appreciated 650%. Silver, 1,000%. So what we tend to see in a bull market is gold will initially move up, silver will lag behind as it is, start to follow gold higher, and then it will outpace gold typically toward the tail end of the bull market, right? And outpace gold significantly. I expect that's going to happen a third time. So silver is lagging behind. It's about 60% of all-time highs. It's trading at $30. 50 is the all-time high. Gold is making new all-time highs. Silver hasn't even done it once yet in this bull market. It will catch up, I believe, late stages and surpass gold in terms of price appreciation. And I'm not a technician, but if anybody can do this, just go to your Google, the answer for everything. Pull up Google and type in 45-year silver chart. And what you'll see is, and again, I'm not a technician, but you'll see a 45-year cup and handle formation, which is one of the most bullish formations in technicals. And when you break out of that cup and handle, you tend to have massive gains. 45-year cup and handle, just put that in perspective. This is not a short term. This is a long-term trend that's breaking out as we speak. And the technicians that I've spoken to tell me that because of the boundaries of the cup and handle, basically we're looking at gold going to about $90 an ounce. So that's a 200% appreciation. Yeah, $90 per ounce. So about a 200% appreciation from where we are now. And I think that's absolutely realistic given the history of gold and silver in bull markets.
So is the
not tomorrow, but
are you able to buy silver with your firm the same way you do gold at Perth, or is that a different trade?
yeah, it's exactly the same parameters. 2.25% above the spot price, no ongoing storage fees, and you don't have to pay to move it around, the heavy, bulky metal.
Yeah, that's the problem, right?
It's amazing.
Yeah.
So if you're considering silver in a big way, Perth is your answer. There's nothing in this world that I know of that's better.
Yeah. And that's a profit play.
No question. For me, that's profit.
Yeah. Yeah. Super interesting. Yeah.
For like our average individual clients that are looking at IRA funds, one of the best things I could suggest for them is, take your Roth IRA funds where you don't have to pay
No
taxes.
taxes. Yeah.
Yeah, on the appreciation and buy silver at Perth.
Yeah.
I think of a better play for individuals. Yeah.
Yeah.
So,
So uh when does it make sense, aside from your kind offer, to engage with people to help them understand what they might need to do or thwart some things that they don't understand? Is it a $10,000 buy? Is it a $100,000 buy? When does it make sense for you size wise for a customer?
for me, just to be able to make sense to do the trade, our minimums are 1 ounce of gold,
Yeah.
1 ounce of platinum, 1 ounce of palladium, 100 ounces of silver.
Yeah.
Now, that being said, we sold a longtime client 50 ounces of silver yesterday.
Yeah,
I
well, that's
relax
different.
all
Yeah.
the time just
Yeah.
to take care of people. But, for me, it's everybody's different. I mean, there are family offices and there are individuals that are just starting out, and I think everybody needs gold. So, you know where we stand when I tell you this story. So Glenn's one of his best clients ever, started coming to him once a quarter, and he would buy one gold South African Krugerrand. Okay. It was back in the 70s. And every quarter he'd call him up and he'd buy one coin. He did that for about a year and a half. And then he started buying 100 coins at a pop. And he could do that all along. He told Glenn he wanted to know how he would treat him when he thought he was only buying one coin.
Right.
Right. We carry that with us every day.
Totally
Yep.
makes sense.
Yeah.
So last question, if it's okay.
Yeah.
Uh,
I'm yours. So
yeah. What is what is your opinion about physical versus buying some certificate or stock trade or gold.com, whatever the optional ways to express an investment in silver or gold?
yeah. So basically it comes down to two other options, right? People look at gold, and I hear people like early on, somebody would say, yeah, somebody said to get 10% of my assets in gold, and I own 10% in new mud mining. I'm like, well, you don't own any gold at all. Okay. What you own is you own shares in a business whose job it is to mine gold, and if they're profitable, return those profits to shareholders. That's different from owning an ounce of gold, which nobody manages or mismanages. right?
Right.
Because when you have a company, now you have all sorts of variables. You have the variable of the reserves,
Execution risk. Yeah,
management
yeah,
team,
yeah.
the indigenous personnel, permitting. I mean, you just name it, right? That all could, conspire to generate no value. I mean, right now, although it's kind of boggling a lot of people's minds, the mining stocks are not really yet in this rally. Everybody's like, why not? Their margins are there. The market's just not in it, but the gold price is responding, right? So it's different. It's a different investment. If you want gold, you got to buy physical gold. The other option is a lot of people look at ETFs, and
Right.
I just covered this in a little segment for our readers and listeners and clients. You know, we did a poll and it said 35% of our clients like ETFs to own gold. And I'm like, why? Such a bad idea, in my opinion. Because again, you own no gold at all. You own shares in an offshore trust whose fund manager's job it is to mimic the price of gold, right? If they do a good job, then okay, it sort of works out and it tracks the gold price, but you own no gold. In most of those options, you cannot turn in your shares and get gold delivered. You come into cash,
Right.
right? Like any other stock or what have you. Um, you look at GLD, one of the most popular gold ETFs, it's supposed to be 10 times the gold or 1/10 of the gold price. If you look at SLV, one of the most popular silver ETFs, it's supposed to be 1/10 of the silver price. They virtually never are. Why? The fund manager has a job to do. They have to deal with real world practical
Yeah.
obstacles and you know problems to they got to sort out. One of which is, let's say they bought and sold all day long online, the customers, and they want to. At the end of the day, the fund manager has to buy 50 ounces of gold and 5,000 ounces of silver. Can't do it. Physically impossible at the rates they need to do it at because they buy it from the bullion banks. And the bullion banks won't sell or buy anything less than 100 ounces of gold or 10,000 ounces of silver at a time. So the fund manager has to say, you know what? I can't buy 50 ounces of gold. Do I stay short 50, see what happens tomorrow, or do I buy 100 and go long? And there are implications of both. Same thing with the silver.
Yeah.
So it's not cut and dried.
Yeah.
There are fees as well. The biggest thing is most people don't read the prospectus, and you really ought to. If you dig into the prospectus for any of those ETFs, you'll find out that the offshore trustees are incredibly well protected,
Yeah.
but you, the shareholder, are not.
Right.
Uh, in the end, why why buy something that's a proxy when you can own it? It's so easy these days to own precious metals directly. Why go for a proxy?
Yeah. Yeah. And just by definition, you could see the value in it and that somebody knows better than you to trade gold or do whatever they're doing. But then you're a trader. You're trading. You're not investing and keeping it, right?
Trader to the trader.
Yeah.
You're
Yeah.
not even doing it yourself.
Right.
And Rob just came in and he said everything I said and a lot more to say.
Yeah,
So
right.
avoid the counterparty risk, and he's 100% right.
Yeah.
So
So let me just repeat that for everybody. Thank you, Rob. Own physical gold to avoid counterparty risk. Yeah. How about
amen.
that? Yeah. Well, this has been super helpful and just looking forward to next week. And we'll make sure everybody gets the invitation and then we'll put you in touch with everybody that was RSVP to this. And that was great. Super, super appreciate it. Yeah.
Yeah, it was fun. This is what I do. I'm passionate.
Yeah.
Gold's been doing its job, Arthur, for 5,000 years. It's been doing it really well. Why am I still an evangelist for gold in 2025?
Yeah.
I
Well,
don't get
I
it.
can see why. Yeah. Yeah. Super. Well, I appreciate it. Thank you, Rich. And thank you,
Anytime.
John. John's on the call here. Thank you for doing the referral to Rich, John. I appreciate it. All right. Till next
That's
time.
my beacon friend. Thank you, sir.
Yeah. Okay. Then remember, everybody, we're going to post this to the Family Office Insights YouTube channel. Anybody that you think will benefit from hearing what you hear today, just feel free to get in touch with Rich. We'll make sure you know how to do that. And as I always say, thank you for spending with us. The only thing you can't make more of, and that's your time. Till next time. Thank you. Thank you, Rich. That was great. Appreciate it. Okay.